So one thing we need to consider is that the market isn't dumb. The market's not stupid. It's a lot of people putting money on the line. So they're making calculated judgments. And they're projecting what the future is going to look like. So they're projecting what possible outcomes of coronavirus are going to be. A lot of people understand that this is spreading. They understand it's been spreading. They understand it's had X effect in China. It's having Y effect in Italy. It's having Z effect in Iran. And it's having N effect in the United States. And it could have B effect in the United States. So people are acknowledging this could spread. And yes, a lot of things went down yesterday. Tom Hanks got it. Rudy Gobert got it. Donovan Mitchell got it. NBA canceled its season. WHO said it was a pandemic. A lot happened yesterday that made headlines. But the market isn't stupid. At least not all the time. Sometimes they are, and when they are, you take advantage of Mr. Market. But right now, it seems like everyone's talking about coronavirus. Everyone's talking about oil. People are deciding what to do with their money. And they're being a little fearful, which means they're considering the worst case scenario with coronavirus, which means that's baked into the cake. It's baked into the cake. Maybe the cake isn't done cooking. Maybe it's still in the oven. We got 2 minutes left, it's a 20-minute time or whatever it is. But we have to acknowledge that the market isn't dumb. The market is understanding what the possible risks are, and they're calculating for those risks. And at some point, those risks are completely calculated. If not completely calculated, overcalculated, overhyped, oversold. And when the market becomes oversold, you must buy. And right now, I believe a lot of the coronavirus fears are baked to the cake, and you got to be nibbling on the way down. Prices are pretty much good now. We're back at 2018 levels. We've had a lot of growth since 2018. We have a trade deal. We have countries like India starting to emerge again. We have worldwide strength. We have renewed economic strength in the US. We have record unemployment. These are facts. And we got to make judgments on the facts, on reality, and not be caught up in the current zeitgeist, the current coronavirus fear. We have to let the market kind of focus on that. The market keeps selling, and we got to be focusing on the next step. So what's the next step? The next step is coronavirus recovery. I'm talking to people in New York. They say the streets are empty. Everyone who's got a house in the Hamptons is going to the Hamptons. You know what this is very similar to? This is very similar to the response in China. A lot of people in China, they live on the coast. All the big cities are all on the coast. They all got shipping towns. But where did they go when coronavirus fears came? When China shut down, they all went out to the country. They all left. And then in a matter of a couple weeks, a month or so, coronavirus dissipated, flattened, and now there's no coronavirus fears in China. The factories are coming back online, and they're resuming economic growth. The same thing is going to happen here. We have 1 million test kits already active. We're going to have 4 million by the end of the week. South Korea has gotten their coronavirus situation all under control. You know how? They got very aggressive with testing, doing over 10,000 tests a day, lots of test drive-thrus, encouraging people to come and get tests. That's what hasn't been happening in the United States. That's what's going to start happening now, and I expect in the next couple weeks, yes, we're going to see a pickup. Yes, there's going to be more cases tomorrow. Yes, there's going to probably be more cases next week and possibly the week after that. But in 3 weeks' time, in 4 weeks' time, when people are staying home, when colleges are canceled, when people are going out to the countryside, when people stop going to concerts, stop going to games, stop going to large gatherings, it's not going to be like this virus is continuing to spread. And the numbers are going to come down, and all of a sudden, stock prices are going to be at nothing compared to where they were, and people are going to be like, oh, wait, it's time to buy some stocks, and the market's going to go up, and you don't want to miss that. So what do? The message is not changing, fellas. You buy on the way down. Today is a good day to buy. I was buying. I was dipping my toes in the market, adding to positions I hadn't otherwise added to, and starting a couple of new positions. I bought some oil options on one oil option for expiring 2022. I assume by 2022, there will be a nice oil recovery and that industry's gotten hit too hard. But it's possible that company goes bankrupt, so I'm not buying the stock. taking a minimal risk, maximum reward kind of play. Doesn't matter. You got to be buying on the dip. Whatever it is you want, you got to be buying on it. We're not playing in the now, we're playing in the future. Stocks are long-term assets. So have that sense of mind. Focus on the long term. Realize in the short term people are panicking. Justly, the market didn't react to coronavirus while it was in China. Then it came to South Korea, Italy, and Japan, and Iran, and people freaked out very quickly and the market started selling. They should have reacted when it was in China. It should have been a very controlled downturn. But that's not what the market does. The market is reactive, not necessarily proactive. I'm here to help you be proactive about your investments, and I'm telling you right now, excuse me, it's the time to buy on the dip. We got to be proactive for the rebound. We are at good levels. Prices are cheap. I would suggest staying away from oil unless you're doing some calculated investment, high-level thing on a 2020 call option, which is what I did, and I wouldn't recommend, but I wouldn't tell you not to do. Anyways, be ahead of the curve, be ahead of everyone else, start buying. Don't buy in chunks. It could be down more next week. Buy a little bit here, buy a little bit there, buy a little bit next week, buy a little bit the week after that. Buy a little bit today. Be buying, put yourself in the frame of mind that, oh my God, my portfolio is getting destroyed. Everyone's getting destroyed in what they have. You should have been listening to me before. You should have pulled 40 to 60% out, had cash, not been buying that week that I posted that 20% chance of recession video where I said, don't be buying, except that one day when China, I think it was Wednesday, China got back to no new cases, or like 200 new cases versus 1,600 the day before. I said, okay, it's time to buy. Next day, couple in South Korea said, whoa, hold on, let's pause here again. Friday, things got a little worse. Whoa, big time pause. And then we saw what happened Monday. So be buying, be nibbling, be smart, be ahead of the curve, make good decisions, don't buy in chunks, nibble on the way down. Let's get back into the market. Let's realize prices are good. Be greedy when others are fearful and be fearful when others are greedy. Peace.